Let's get into some technicals with Richard Morris, Head of Research at Richard. Very good morning. Let's dive straight in on the gold chart here. What happens from here?
Morning, Jeff. Good to talk to you. Gold, the market is patterning and consolidating very nicely. The setback we're seeing is what one would expect to see, a test back to 921, which we might reckon that this market should be able to hold on to. Possibility to pop down to 908, but overall the market is very, very good. We're anticipating the market to do one of two options here. We can consolidate through until the 12th of September and then make a breakout from the 957 level, or we can target the 21st of August and go for 1,023.72, which if we break above that will then signal the next part of the bull rally. Whichever option we take, it is going to be a bull rally that will come for this market. There's no bearish patterning in this. The harmonics are actually running quite well, and we target for the end of this year, beginning of 2009, target price on gold of 1,298.
Okay, let's move you on. Swiss franc against the dollar here. What action are you expecting?
Yeah, well, Swiss franc, interestingly enough, is currently standing. It's got three Gann lines which derive off the real peaks before the big drop occurred in this market, and we're pinned between two of these lines at the moment, which will give us a range between 103.61 and 98.54. We're at the top end of the range. Only if that broke above 104.10 would we expect the market to go up to around the 155, the 1.0553 level, but we don't expect that to happen. We do expect the market to continue trend and to remove these 17th of March lows that we saw previously, and we think this market has got a great deal of potential. The US dollar is looking like it's going to weaken significantly against the yen. We just did another confirmation top out there. Euro, we're looking like we're going to break out there as well. So the US dollar could come under pressure. Sterling is going to be the only one which we think will lose ground against the US dollar going forward.
Let's have a look at oil then. Where's this one go, Richard?
Oil, very interesting. I mean, we came on the show on the 28th of December last year and called for 147 for being the high for the run on this, and it's now hit the point correctly, and we've got a good correction movement going on. The market we're expecting to trade down to 120, 127 by the 5th of August. On the 5th of August, if it can sustain this level, then we would expect the market to go into a protracted period of consolidation until the October run. There is some chance of it going down to 110.78, but we're doubtful that this will actually take place. But we're looking for October to see pricing action to take the market to 156, but we're looking for next year. We're targeting the high to be made on the 17th of April, which should give oil a high of $173.69, but if it broke this, then we'll be looking for significantly higher than that, probably up to 211.50, 211.75, somewhere around there.
Richard, good to talk with you this morning. We'll let you go, sir. Richard Morris, Head of Research.